What an intriguing session of trade today. Firstly, the Nifty did manage to close in at a fresh record high for itself. So after clocking that 16,000 mark and then 16,100 in trade yesterday, we finally managed to finish off at 16,250 plus levels in the Nifty futures. So fresh record closing, a nice, smart, triple-digit run is what you've seen on the index today. Now, what contributed to the index, of course, is another debatable scenario altogether, because besides private banks, which were, mind you, the underperformers in the last quarter, finally they woke up, but the rest of the market did not. I'll explain what really transpired in trade then. Let's take it from the top. The gainers today, and here's an interesting list. It was Kotak Bank, which held out by about 4%. There was ICICI Bank, which held out 3.25%. It took itself above that 700 rupee per share price point. 713 on the ICICI Bank futures is how we shut shop for the day. SBI reacted very, very positively to its numbers. The asset quality outcome has been something that the street has really taken to. They've managed to brave the impact of the COVID second wave. The slippages have come in at 2.47% at a total of about 15,666 crore rupees, of which a significant amount was already pulled back in the month of July 2021. So it seems, or rather the indication is that the bank is recovering faster than anticipated, which perhaps explains the kind of outperformance that SBI has seen of late. And today was no different. After its numbers, the stock held out very, very smartly in trade. Even some of the underperformers, as opposed to the rest of the banking pack, like HDFC Bank, participated in today's move. HDFC Bank held out by about 2%. There was Axis Bank, which held out about 2%. And there were one-off moves by Reliance Industries, which was less than 1% higher, about 8/10 or so. Bajaj Finance and Tata Steel as well contributed to today's move. The largest mover on the index, however, was HDFC, the financial giant. After its numbers for the second consecutive day on the trot, this particular stock has been holding out very smartly. HDFC managed a gain of about 4.5% in today's trading session. That said, look at what was happening outside of these gainers that I just spelled out, and namely just private banks. 42 stocks only within the entire listed F&O universe went home as gainers. Rest 123 were actually decliners in trade today. So everything from a Titan to a Adani Ports to a Tata Motors to a Nestle, BPCL, Hindalco, even a Dabur, which posted excellent set of numbers and a beat on all counts. They were all laggards in trade today, along with the Tata Consumer, with the Maruti, UPL, Divi's Lab, Sun Pharma. They were all laggards. The key pressure points, however, were names like Idea, which has now sunk to 6 rupees per share. 19.5% cut coming in on Idea futures. This has really been nosediving one way. Indus Tower, PI Industries, Indepulse Housing, as well as Coforge, which saw 4.6% cut today after a block deal that transpired earlier in the morning on the stock on the exchanges. So that said, it's a bit of a tricky scenario now, because banks, which had been an underperformer, have finally begun to perform as a sector. But the fact of the matter is that the rest of the sectors are not. Everything from automobiles to chemicals to textile to real estate to capital goods to metals, they were all a lagging sector today. So let's see what happens, whether banks can continue to push up the markets higher, or would the green on the index, thanks to private banks, rub off on the other sectors also or not?